The purpose of this short video is to illustrate how the Advanced Currency module works in Visual Cash Focus 8. This is a new module only available to Corporate and Enterprise Edition users. The new Advanced Currency module is activated by going into Currencies, choosing Variable Exchange Rates, and then clicking on the new button called Rates for Actuals. The table you see here is for entering the exchange rate for all historical periods. You'll see that this model has 11 historical periods. We can enter an exchange rate for the income statement for each period, and if we want to, we can also enter a different balance sheet asset and liability rate for each financial period. At the bottom of the screen, we enter the original opening balance sheet exchange rate. This is the rate that was used when the budget would have been approved. In our example, we're going to assume that the exchange rate entered is used for both the profit and loss and the balance sheet. This data is entered into the local currency model so that each time the model is rolled, only the next period's rate has to be entered. Once the rates have been entered, we convert the local currency model into a new home currency as follows. Step 1 is to reconcile the local currency actuals and then print the results. After we've imported the local currency results, we check that the balance sheet balances by going into Actuals Entry, clicking Balance Sheet, and then clicking the Totals button. Here you can see that the balance sheet is in balance. We then click Transfer, we click Do It, we confirm the opening timing assumptions for payables and receivables, and then we print the results. First click Profit and Loss. Here we see the local currency result in Australian dollars. Here we see the local currency balance sheet in Australian dollars. Once we have distributed our local currency results, the first step in converting the model to the new home currency is to save the model as another name. Here I'm specifying the company name, the currency, and the period that it relates to. Click Proceed to save the copy. Step 2 is to click on Currencies and enter the exchange rate that you want the forecast data to be converted at. Here I'm specifying a rate of 1.25 because Cash Focus multiplies by the exchange rate. We'll then close this currency screen, click Organisation, change the local currency to my new home currency, and then close the screen. Here is a new form for the currency update. We're going to click to use different rates. Cash Focus then wants us to confirm the rates we're going to use. Close that and then click Do It. Cash Focus will now convert the local currency model to the new home currency at the rate specified for each period. The final step is to click Reports Actuals and view the final converted results. If we click Profit and Loss, we can see the New Zealand equivalent of LAB Australia. Here's the results converted to New Zealand dollars. If we click Balance Sheet, we'll see the converted result to New Zealand dollars. And under the equity area, I've asked the software to put the exchange rate difference for each period into a line called Retained Earnings Exchange Rate Movement. And here is the effect of the changing New Zealand to Australia conversion rate. The model is now ready to be consolidated with the other New Zealand or home currency models.